Hi there, I'm Tyler Ballhorn. Welcome to the Stockscores market analysis for August 9th, 2010. We are at tradingdesk.stockscores.com. I encourage you to visit this website. It is a new one. It will soon be part of the normal stockscores.com website, but it has a lot of great new tools that we are just completing testing on before we combine the two sites. I want to start off this week with a chart of the Dow 30 ETF, symbol DIA. This chart is showing that the buyers are in control of the market and have been so for about 5 weeks now, since we bottomed out early in July. The concern that I have is that the bottoms are rising more quickly than the tops. For those of you that follow charts, you will know that this is a rising wedge pattern, and if we get a breakdown from a rising wedge, that typically leads to a downward move. Now, the market has not made that breakdown yet, and it could continue higher for some time. Therefore, we should be optimistic, but cautiously so, because of the shape of this upward trending pattern. Now, this pattern repeats itself as we look at some of the other US indexes. Here you have the S&P 500. You can see that rising wedge pattern here as well, right there. And it's also prevalent in the NASDAQ chart. However, all of these charts have another pattern building that really gives us some conflict and makes the market kind of difficult to call right now, because we also have a head and shoulders bottom. There you can see the left shoulder, the head, and the right shoulder. Now, what does this pattern mean? Well, essentially we have switched from falling tops, which we have there, and falling bottoms, which we have there, to rising bottoms and rising tops. What a head and shoulders pattern really is a reversal pattern where the sentiment of the market is shifting from pessimistic to optimistic. Now, today the NASDAQ chart, and a few days ago the S&P and the Dow charts, broke through the neckline of that chart pattern. It is questionable, however, whether that breakout can hold, because what also happened is we've got diminishing volume on the right hand side of that chart. And that gives me some concern. So I am optimistic about stocks, but I am certainly cautious with stocks right now, particularly on strength when there is little volume being shown. Now, one of the reasons that U.S. stocks may be doing well right now is because the U.S. dollar is doing poorly. As the U.S. dollar falls, it makes the U.S. stocks, of course, cheaper to foreigners. Here's a chart of the US dollar. It has fallen quite sharply over the last 2 months, but it is now at a place where it should bounce. You can see here that we've got horizontal support right there, and if we get a bounce back in the market for the US dollar, that may cause some people to take some money out of US stocks. We have a number of different things at work here, and it makes me cautious about stocks right now. Although I still haven't seen a breakdown, I am certainly watching for one, and I would suggest that all of you do the same. Now, the effect of a falling US dollar is that commodities also get cheaper, since they tend to be priced in US dollars. Something like oil has done reasonably well over the last little while, certainly not in proportion to the strength of the weakness of the US dollar, but I do think that oil will likely continue higher unless the US dollar really reverses. Gold is a bit of a question mark. You can see that the chart for gold, we've had a bounce off of support, but we also have falling tops on gold, and we're starting to see a setup of a falling top here again. I think we could see gold move lower this week, and I would be cautious with gold. Finally, let's take a look at the Canadian dollar. Here's a chart of the ETF for the Canadian dollar, FXC, and we like to look at this because many of our viewers and readers are Canadians, and of course this has some bearing on them, but it's also an important currency because it represents strength for commodities, since the commodity market is so strong in Canada. Well, this particular chart shows some optimism, and it also shows a breakout from what we call a pennant pattern, which happened about a week ago. We've had a little pullback since. We could see it pull back a bit more, but I do like the Canadian dollar to go higher in the near term, again, provided the US dollar does not get too strong on a bounce back. Now, I expect a bounce in the US dollar, but that does not mean a reversal, and it should be that the US dollar trends sideways after a little bounce back. All right, well, that has been the Stockscores market analysis for August 9th, 2010. If you have any questions about what we do here, give us a visit at www.stockscores.com, or you can always email me at tylerb@stockscores.com. Have a great week in the market and trade well.